Hi guys, welcome to another video. So as you may know that I always stress on investing globally, like different stock markets, housing markets, commodities, so we can diversify our portfolio, but not too diversified that we cannot yield a positive return or outperform the index, right? So if you have to ask me if I can only pick one stock for each country, what would they be? Okay, so today we'll talk about 5 countries and 5 stocks. If you haven't subscribed to my channel, please subscribe to the channel and also click the notification button so you will be one of the first ones who see our most updated videos. And also you can like my Facebook page. If you like this video, please give me a thumbs up and also share this video to your friends. So if I have to pick one stock for one country, there are few criteria for me to pick a stock like that. So first of all, it has to be stable, it has to be growing, and also in terms of dividend payout, okay? So these 3 will be a mixture of combination of whether or not I would choose this stock or not, okay? So the first country we'll talk about is UK. First of all, why UK? Because UK is the second largest economy in the Eurozone, in the Euro area, okay? But also because of the Brexit and because of the terms, and also recently because of the outcome coming out that was not as what Theresa May was expected. So all kinds of these issues making pounds and the confidence to UK is going weaker and weaker. But technically, the UK index has broken above triple top. So technically, it's a really good signal in the UK index, okay? So we can look at this index, but which stock in UK should we invest in to represent or better expose in this industry when it's going up? So we choose a stock. It's Compass Group, okay? So you may or may not know this company, but you must know the branding under this brand, okay? The branding's under this brand because it's doing caterings, restaurants, cruises, and also hotels caterings, okay? So pretty famous, okay? So it is pretty strong company with steady growth. The growth we're expecting, it will be growing for another 18.4%. That means that if we find this stock, even it's not undervalued, but as the time goes on, the company is earning money, right? It will be more and more undervalued. So the earlier you kick in and buy this stock, the earlier you become their shareholders, the earlier you can earn the money, okay? So this is our expectation. And also their businesses are expanding to North American and other areas. But only in the UK zone, the market share is pretty high. And now, first of all, let us look at the dividend payout ratio. Within these 10 years, it's consistently 50%. What it means is that if we become their shareholders, then whatever each dollar they're making, they will give us 50 cents for sure each year. If they're making $1 billion, we'll get $500 million for us as a shareholder, okay? So it is really stable. Dividend payout ratio is stable, the growth is stable, the market share is really stable and it's pretty big. So technically, if we're able to find these stocks, and technically when we open the chart, usually the trends of these stocks are going up 45 degrees angle, okay? It's always like that. So using wave theories or GAN theories is pretty too fancy for these stocks. You only have to find a little chance to buy and then hold, okay? So what is the chance for this stock? As you can see, it's another 45 degree stock, right? And so you must be able to find an orange channel in between, which is the orange channel and the purple channel, okay? So unfortunately, it hit the new high and coming back down. But there's a good chance for us to buy some cheap things, okay, with potential growth. If you buy cheap things but it's not growing, it's nothing cheap, okay? So you can try buying this stock at 15.55, okay? So if you cut loss, you can set it in 15.20. It's pretty tight, the cut loss, because if you set a tight cut loss and then you ignore if the stock goes up, it's the best strategy. So you always calculate the risk. But if you gain money, you'll be more reluctant to sell the stock, right? So most of the case is in the reverse. You always sell something that we are profiting, but holding those that are losing money. But we have to understand why they are losing money. There must be a reason behind. So another way is if it breaks below 1520, then probably it will hit the bottom of the channel, which is 1415. So you can kick in 1415 and cut loss is 1420. In both of these cases, the target you can aim as high as 1695 because this is something that it deserves because in this year the earning growth will be around 18.4% anyway, right? So using technical analysis is just something for us for about a good timing to buy the stock, okay? So the second country is Korea. So some of you may know that ever since I've been in this industry since 2006, only except 2008, almost every single year I only buy other countries other than Hong Kong, China, and US. It's always South Korea, Taiwan, and Germany, okay? So South Korea are really familiar with this market. But if you are not, I will explain what you should buy in this market. So in the recent years, due to this super fast growing index, right? So in the recent years, it's not going up or down, it's only fluctuating in between this level. But in 2017, this year, the index has broken through many of the resistances. Now, in terms of wave theory, we are estimated that it's only in the middle of the bull market, okay? So it's going up, right? But in terms of screening, you understand why Korea is the country who do traveling, retails, export, electronics, right? So we have to look at something that we will sacrifice something like dividend payout, but we are looking more of a growing and more of a monopoly state of situation, okay? So we're looking at Line. I'm not sure if you know this communication tool. We have WhatsApp in the world and we have WeChat in Malaysia, Singapore, China. We also have Line in Korea and Japan, also other countries. So Line is something like WhatsApp. So you can see everything is green, okay? Forget about ICQ because you may probably don't know what is ICQ, right? But something like that, okay? ICQ is in computer, this is in mobile phone, right? But if you don't know, it's owned by a company called Naver, okay? Naver is something like Google search, okay? So don't get me wrong, people in South Korea and I don't know North Korea, right? Because in South Korea and Japan, they also use Google. But just like in China, they also have Baidu. And also in South Korea, they have Navia. It's something that is a search engine. If you know that Google already has a strong infrastructure and backbone of testing and guessing the speed of you typing and the error and the mistake, and they can guess the behavior of the user behind the computer. So there are some technologies that have been using now. It's not in the future, it's using now. So along with the Line, so they will have access to big data, right? So big data is something that we're experiencing right now because in December just passed in Hong Kong, we talk about that for every 100 times you turn on your mobile phone or turn on your computer, more than 60 times you are distracted. That means more than 60% of the time you're doing something that you didn't plan to do. And you will be buying something you didn't even plan to buy. Okay, so big data is something like that. So that is why Facebook using millions of dollars purchasing WhatsApp. WhatsApp, a tool that doesn't have any profit, right? But in fact, it's big data. So it is opening a data center called Gap in South Korea. It's pretty big, just like a missile attack, just like Dubai and stuff like that. It's really big. It's just only a data center. So you can see how powerful big data is. So we also know there are Alexa and Siri, stuff like that, but there isn't much in the east coast of the market, or at least they're not too familiar with Alexa and Siri. I'm fine with that. But in South Korea, they're developing another product called Clover. So it is using not only your sound and voice recognition, you can use your nose, breathing, ears, eyes contact, and to detect what you're thinking in your mind and then execute something because what you're thinking of. So they're using this product so you can search online what kind of product is that. But it's launching this early summer in Japan and Korea first. Okay, so we'll look at how they have the big data and how they can earn money. And obviously, the whole story is here. Okay. So we are expecting it is going to have earning growth of 28% this year. So this is a higher return than the Compress Group, right? But also they have less dividend payout ratio, right? But if they are able to earn money and profit for the shareholders, I don't mind getting no dividends at all. This is what Warren Buffett said. Okay, so technically it has another channel, but the degree is not as inclined as the Commerce Group, but also we can make a trade of that. Also, unfortunately, it hit the upper band of the channel and coming back down. So the immediate support is the bottom of the channel, which is 810,000 won, okay? It's not in US dollar, it's won, okay? So if you cut loss, you can set it in 800,000, okay? But the target, you can set it in the mid-trend of the channel, okay? You can hit, the target is 890,000 won, okay? So it is about 10% growth technically. But also not to forget that the growth is already around 28%, right? So if in fact it will hit upper band of the channel, technically it will yield 20% of return, and also it matches fundamentally, which is yielding a growth of 28%, right? So this is a pretty good deal. The third index I think is undervalued for a little bit is UAE, okay, it's the UAE. So recently we keep on talking about some cities in the Mid East and also Dubai, stuff like that, because the valuation is pretty low. Why is that? Because we see that the crude oil prices were dropping down as low as $25 a barrel, right? It's something, a game that played by the Saudi Arabia and also to force all these shale gas research and companies going bankrupt, and then they can finally become monopoly again. So if you use energy, you have to find Saudi Arabia. So not to talk about this first, because in fact they do not own the most oil reserve in their land, okay? It's another country, okay? So, but anyway, now the crude oil price is coming back up. I believe that they can no longer going back to $20s and $30 per barrel, because all the countries will go bankrupt, okay? Not United States, they will lose money, but for all the countries in the Middle East will all go bankrupt. That doesn't work. So the oil prices, if you believe that it will not go below $30 to $20 a barrel, again, you can start thinking about Dubai or UAE, the countries and index to invest in. But what companies can we invest in to better expose in this market? So I suggest there's only one stock that I can pick. I would suggest Aramex, okay? Because Aramex is a delivery company. So nowadays we do a lot of online shopping, right? We really need logistics, because nowadays people say everything is online, big data, everything will be online. But yourself is offline, right? Yourself is offline. So as long as you are offline, you need your watches, you need clothing, pants, shoes, food to eat, something like that, right? So you need logistics, okay? So the market share is pretty crazy. Their businesses is expanding to also Canada, USA, and also in the India and also China because of the One Belt, One Road policy and the structure, okay? So the market share only in the Mid East area is 80%. 80% of market share, right? So unless the economy and all activities in the Middle East will be stopped and frozen, if not, this company will be the best option to expose in this country or even in the global economy. So, but the criteria of screening this stock is a little bit different because of the market share is really big already, right? So we look for a bit more of the dividend payout ratio, and also we'll sacrifice a little bit of the growth. But this is a blue chip that is really stable, that if the country is doing nothing wrong, then it's going up, but this stock may be outperforming for a little bit, all right? But in fact, if the economy is doing not so good, this company is still earning solid money, right? So it's a safe investment, so that's why. So technically, you can see a trend line going up. So we'll see that if now is around $5, if it going back to the trend line is pretty steep, okay? So we can think about buying this stock at $5.50, and the target we can aim at $6.20. But as long as it breaks below the $5.15, we should cut loss. Then we can wait for the bottom trend line, which is around $4.5 to $4.7, okay? So in Hong Kong, Hong Kong is a really special place. The economy, the growth is not as promising as before, but it is the stepping stone for us to invest in something in China. Okay, so Hong Kong, we can see there's only one thing, is the housing market is going super high. So other than that, people always say that the Hang Seng Index is not pretty good. As you can see, it's pretty fluctuated, but it's not going up. Even if it's going up, it's pretty unstable, right? So people always say there are all those junks in the Hong Kong stock market, but there's one stock that's pretty good, and it is the only way for you to invest is Hong Kong. It is only listed in the Hong Kong market. That's Tencent. If you haven't heard of that, that's pretty bad, because there are 3 tech giants in China. It's Alibaba and also Tencent and so Baidu. Okay, so 2 of those, Alibaba and Baidu, is also listed in Nasdaq. Okay, but Tencent is listed in Hong Kong. But 3 of those, I believe Tencent is the best, most promising, and lasted for longest time. That is a stock that is most stable and have a promising growth in the future. So every year it almost yield 30 to 50% growth, never stops, every single year for the past almost decade. For the decade before, which is around 04, 06, right? It was growing 80 to 90% every year. So this really promising. So if you know Candy Crush, Clash of Royale, all those games, if you know that there's one more game coming up, is this Chinese game. The market share is 17, only this game, only one game, 17.7% of the Chinese gaming industry. One game, just one game, right? So think about that. Do people in China, Chinese, paying more or less in gaming? A lot, right? So every $100 they're paying into games, 17.7% is paid to Tencent and only to this game, right? So in general, the market share of Tencent gaming is around 50%. 50% is pretty crazy. So now, technically, you can buy it anywhere just now because it's experiencing setbacks. So if you, for a long term, you can buy this stock anytime you want. So also, by the time you see this video, I've left Hong Kong to Canada and hold some classes and seminars. So if you have heard about it and you're living in the East Coast of Canada or even US, you can welcome to visit us. So we'll be hosting a seminar and classes. You can also search online. So I have 4 courses. The first course is on July 29th. It's Saturday in Toronto. So if you want to know more, please tell me. I'll leave you a link. So the last country, the last index is Nasdaq. Okay. So the Nasdaq is like that. I'm not talking about S&P, I'm not talking about Dow Jones. I understand that I've talked about many times about Google and Amazon, right? And Facebook and Home Depot. I'm not talking about those. So now I'm aiming for pure growth, okay? Not dividend, not stable. I'm aiming for pure growth. Really fast growing company. So again, it's pretty weird, but I'm choosing a Chinese stock that is listed in Nasdaq. But in terms of valuation and calculation, I'm not specifically looking for Chinese stock in the Nasdaq, okay? I'm using quantitative analysis and also valuation models, and I can look for this stock. It's called NetEase, okay? 163.com. Never mind the naming or stuff like that. It's a really big company that does a lot of gaming revenues, okay? So online gaming is almost 73 to 80% of its revenue. So pretty sick. So if people stop playing games, it will go bankrupt, obviously. So start off with NetEase is not doing games. They're doing some online shopping data, something like that. So now everyone, even though it happens with Jack Ma, the Alibaba president, okay, he said never do gaming industry. Now the gaming industry is that big and that sexy, right? Now he's doing gaming, okay? So never say something that you will do later, okay? So never say never, okay? Never say always, never say never, okay? So even that quote is never. Anyway, so you can see the mobile revenue since 2015 to 2020, the mobile and also MMO and especially VR games, the growth will be really significant, okay? So this is a big trend for NetEase, okay? So this game and this all kind of games, it's all in Chinese, right? So people all in China, they know this game in Taiwan and Hong Kong, okay? So the market share of NetEase is 19% and the Tencent is 49 to 50%. So one thing you may not know, NetEase is under Tencent. Alright? So together they own almost 70% of the market share. Done talking, right? So if you want to benefit in stocks in companies in China, you know